Good afternoon, everyone. Thanks for joining us. I know that some of you are watching this as a recording, but for those of you who are with us live, thanks for joining us. So, today, what I wanted to talk about with everybody is should you short term rental your home? And this has been a big point of conversation recently. The short term rental market has kind of been a little all over the place. There's been a lot of new regulations tied to it. People are thinking that this could be a potential way for them to pay their mortgage. And so, what this webinar is designed to do is to show you the true cost, understand the rules that are associated with running a short term rental or Airbnb, some of the liability and things that you should look at for protection, as well as how much profitability there really is within a short term rental. And so I am Mallory Meehan. I'm a real estate attorney and investor myself. I have had several short term rentals and have advised others on short term rentals. And I'm an educator in the real estate space. So, what this webinar is basically a reality check. Before you go out and you spend your money on creating a short term rental or creating a space where you might not even see that return, this should hopefully give you a double check onto as to is this really something you should move forward with. This is a very focused on clarity. I'm not trying to hype up short-term rentals. Sometimes they are not meant for people. And so this is designed to help focus on that clarity and avoid the hype. And what this webinar is not, it's not a get rich quick scheme. So this is not something where you should think that having a short-term rental is going to get you rich quick because it's really not. Real estate is the long term game. And so I want to make sure that people who are thinking about this strategy really understand that this is not something where you're going to be making a boatload of money right off the bat. And this is also not a property management sales call. I do not manage properties on a short term scale. And that is not what this is. So, to continue, who is this webinar designed for? Well, this is supposed to be geared mostly towards people who own a property, and whether it's your full time residence or maybe a second house that you have, and you're considering getting into Airbnb, short term rentals, VRBO, anything like that. And this is still where you're at the phase of should I move forward? Should I convert or should I try to make my property a short term rental? Now, this is not for somebody who wants to invest in real estate and is looking for passive income with no involvement. Short term rentals are very active rentals. They require you to be involved, they require you to be participatory. And so, this is not ideal for somebody who is not willing to do that active participation. So if that fits your box, then right off the bat, you know that short term rentals are just not going to be what you should be investing in. Now, today, you're going to learn whether Airbnb is even allowed for your property, what the real startup costs and ongoing costs are, and what drives short term rental profitability. So, we're going to look at things like liability, insurance requirements, and legal risks so that you can help make this a decision that makes sense. And so, does this mean that your property is a suitable property for short term rental? And are you willing to put in the time and the capital that's usually required to get going in a short term rental market? So, the first step that any investor should take is if you are looking at a short term rental, is short term renting even allowed in your market? And so, what you're going to need to know is that every market is different. There are uncertainties, there are enforcement differences across the board. And so, you're going to want to really get familiar with your zoning and use laws. You're going to need to identify exactly where your property sits within the zoning map. And so, on the right here, you can see this is a zoning map of my hometown here, State College. And this is going to help identify where the property fits and if that zoning specifically allows or disallows a short term rental. Now, usually what happens is you have municipal enforcement. And what they are doing is they are actively going onto these sites and they are matching properties based on features that they can see to determine if a short term rental license is required, if you have one. And if you don't, this is where fines and warnings start to come into place. And so this is the real deal. They do take this seriously. And so you want to make sure you thoroughly understand what you are about to enter into when it comes to the legality of your property location. Now, within that legality, there is a lot of focus on whether you own and you occupy your home, or if the property you plan on putting into a short term rental is not your full time residence. This is a very distinguishing factor. And so a lot of regulations have been defined as you can utilize short term rentals if it is your primary residence. However, if it is not your primary residence, they generally have more stipulations and more regulations. Some municipalities don't allow non owner occupied properties to be utilized as short term rentals. Or if you are in an HOA or a condo association, you need to thoroughly understand what their regulations say because they can dictate what you can and cannot do in terms of renting. And so if you have a second property and this is a beach property or, a destination property and you are in an HOA or a condo association, you are going to want to make sure you thoroughly read their regulations and their guidelines as to whether or not you can even use it as a short term rental, and if they offer or restrict the number of nights that you are allowed to rent it on a short term basis. So, a lot of different regulations go into that. This is the first step to defining whether or not you can even move forward. So, this is where everybody should be starting. Now, from there, things that you want to take into account is some legal red flags. Now, you might see that everybody else is doing it. Maybe your neighbors are doing it. Maybe your cousin is doing it. Just because everybody is doing it doesn't mean it's right for you to do. This is probably one of those old adages that we heard as children, but just because everybody else is doing it doesn't make it a smart investment move. Now, you will need verbal approvals in the event that you choose not to go the route of Airbnb. So, are these approvals, are these something that you're going to need to get through your condo association, or are you going to need to have more formal approvals versus just the verbals? So, make sure, in my opinion, everything is documented and in writing. If you had old ordinances that were never updated in your condo association, make sure that they don't have plans to further restrict what you can and cannot do. So that would be something that I would say is a red flag to watch out for. And obviously, don't just completely ignore HOA documents. They can restrict your use and they do restrict uses, and that's why they're in place. And just because you see your neighbor's property listed doesn't mean that it's legal for you to list your property. Again, red flags, you want to make sure that you are in the right position and that what you are doing doesn't impede on what the law or other regulations are saying. Now, here's probably one of the biggest misnomers is really understanding the true cost of getting started in an Airbnb or short-term rental. I'm going to use the word Airbnb, but this can be for any short-term rental, whether it's on VRBO, Booking.com, any of those platforms if you wanted to put it up on your own site. I'm just going to use Airbnb as kind of the general platform. So, when you're looking at this, you're going to need to ensure that first, your property is well suited to host guests. Just because you live in it and you manage it and it works for you doesn't mean that it's going to work for people who are coming to your property, paying you money. And so you will want to think about the furnishing and decor of your property. You're also going to want to think about, do I want these things out and available to guests? So if you have personal items, how do you plan on storing them? Where do you plan on storing them? Do you want to restrict access to certain parts of your property? Those are all things that you need to consider when you are renting, especially if this is your primary residence. You're also going to want to consider safety requirements. Again, you don't need a code inspector to come in and inspect the property that you are living in full time. But if you are now opening your property up to others, charging them fees, this could potentially open you up to liability if there are things that are really unsafe about the property. If you have a fireplace, as denoted in this picture, giving permission as to whether or not the fireplace is usable, whether they can use it. If they can't use it, should you go and try to find a way to prevent the use, just as a further protection on your part? Licensing and permits, just like I said before, a lot of municipalities and a lot of areas are leaning more towards the we are restricting either the number of days you're allowed to rent or that it has to be your primary residence if you choose to rent. So some of them are requiring that you get a permit. If that is the case in your particular market, in your particular municipality, make sure you understand what that cost is to acquire that and how that process is going to move forward. Technology and software. If you are going to be utilizing your own platform, you're going to have to understand what the cost of that's going to be. And you're going to have to understand if you do put your property up on the market and you're putting it on a site like Airbnb or VRBO, they are taking a fee out of your earnings, put it on their platform. And so because you charge somebody $300 a night, in no way does that mean you are actually receiving $300 a night. And so you really want to take into account what those fees and costs are going to be when you're getting into this, when you're doing your pricing estimations, and really understanding how you can cover all of your costs. Another thing to consider, especially if you're in a destination setting, is the seasonality associated with it. Are you going to have times where you have high demand and you're going to have times where you have low demand? And how can you predict that, or how can you get around that? You don't want to overprice people and price yourself out of the market of getting people to come in, but you also don't want to underprice. If you have a big event and you don't know about that event, but people are paying more for average nightly rates, you're now leaving money on the table that could have been yours. So there's a lot that goes into short-term rentals, and this is like running a business. It's not just a listing where you just throw it up and it just goes. You got to have a lot of maintenance and a lot of upkeep and a lot of care that goes into this. Now, these are some of the costs that a lot of people forget. One of the biggest costs is cleaning. Cleaning fees to a cleaner who is reliable is going to be important. Now, on some of these sites, you can offset that cost and charge the renter, but you're also going to want to account for the cost of laundry. So, the utility bills, your water bill, your electric bill, the heating bills in the winter. These are all going to be costs that you are going to have to bore yourself as the owner that you can't pass on to the tenants. Everyday consumables. If you're going to provide toiletries, paper products, paper towels, toilet paper, cleaning supplies for your guests to clean themselves, anything like that, you're going to have to replenish these on a regular basis. You're also going to want to make sure you have a solid contractor or handyman in your area where you can depend on them to help with repairs and maintenance. The difference a lot of times between these short-term rentals and long-term rentals is that you have a constant inflow of people. And when they're only here for a short term, they generally don't have the same respect for the property as they may knowing that it is their full-time residence. So you will want to ensure that you have the right repair and maintenance plan, going in and inspecting after each guest and after the cleaning is done to ensure that everything is to your standards and that you're not missing something that maybe a guest did that you had the opportunity to charge them for that damage. Turnover coordination, again, another piece where you need to make sure the linens have been changed out. You need to make sure that all of the bathrooms have been cleaned. And do you have enough time in between tenants to get your cleaner in there? Or if you're cleaning it yourself, have you blocked enough time off of your schedule to actually go and do all of that turnover? There is nothing more stressful, and I can say this from experience, than having a turnover that was not completed by your cleaner or they last minute cancel on you and you have people checking in within the hour or within the next 3 hours. So you do want to make sure that you have your bases covered and that you're planning these things accordingly. And you also don't want to forget that if you are doing these yourself, that your time is valuable and your time is worth something. And so that's a cost that a lot of people forget is that all of their sweat equity, if you will, that goes into this, they don't account for it. And again, your nightly rate is not going to equal your profit. So you do want to make sure that you're creating these spreadsheets or creating a list of what these costs are going to be based on the number of rentals and how frequently you're going to need to pay them. So, reality check. This is how short term rentals work. There is market demand and there is seasonality. You're going to want to thoroughly understand what's happening in your market. What are the demand drivers? How does the seasonality play into effect? For me, here in a college town, we have a lot of market demand around the school year. And so, dependent on what is happening on campus, dependent on what sporting events are happening, if there are concerts or other things like that, those drive demand. Now, we also have people that are just coming to visit, which is great. But there is definitely seasonality. We see a lot more people coming here in the fall, particularly around football, than we do, let's say, in the winter months when it's colder and nobody wants to be outside. So you have to budget for that. And for being in a northern state, I had to budget for the fact that I was going to have less profits in the months that I had the highest expenses. I had to make sure that I was accounting for that and knowing that I might have a huge profit in September and October, but my utilities weren't going to be that high because the heat didn't need to be on and the AC wasn't necessarily on either. So my utility cost was low. However, come January and February, when I don't have the bookings, my utility bills spike because of the cold, because it's winter, because I needed to be running them more frequently. So, just something to consider within that market demand and seasonality. Now, occupancy versus pricing balance. You want to know, should you be charging extra for the number of people who can be staying at your property? Typically speaking, if you're able to house more people, you can charge a higher nightly rate. We're assuming that people are maybe sharing the cost burden. And so this is where you need to consider that and how to balance the pricing within your market specifically. So, what you should be thinking is if I were to break even on this rental, how much do I need to charge? And then from there, you need to figure out okay, how do I make a profit? And you're going to need to consider all of your upfront costs first. And how long is it going to take you to get paid back for those initial upfront costs before you're even making a profit? And so there are times, absolutely, where short terms outperform long terms, but it's really dependent on as an owner, are you paying attention to these trends? Are you taking them into account? And are you thoroughly accounting for all of the expenses that go in and not just the obvious expenses? So, again, short term rentals are not passive income. If this is something that you are looking at doing for passive income, this is not what you want to be doing. This is like running a hotel. It is getting into the hospitality industry. You are having people stay at your property. They are going to give you reviews, and your reviews are really what's going to sell your property. And so you have to be conscious of that customer service relationship and knowing that if a tenant or a guest has a bad experience, how are you going to combat that? How are you going to overcome that? Now, one bad review isn't going to be the worst thing. But before you set yourself up, think about how you book for properties. You probably read the reviews. And if you're anything like me, I usually read the bad reviews to understand what I could be getting into. And so this is something that you want to try to combat before you actually have it. So you want to make sure that checklist is taken care of and you want to put yourself in the shoes of the guest. And so one of the things that I often tell people before they actually put their Airbnb on the market is have a friend stay at your place and have them think about what they might be missing. And so this is a great way to make sure that you are using your guest lens and thinking about their needs before they tell you that they had needs that you forgot. So again, this is very operational intensive. You're going to want to make sure that you have systems and processes in place for your cleaners, for the turnovers, for how you're responding to guests, whether they have a inquiry or what's going to happen you have to cancel. So while short term rentals can produce very high margins and high profits, the high returns often mean there's higher involvement. And so this is where you're coming into valuing your time and valuing the other things that come into play with these short term rentals. Now, as an attorney, I always have to cautious people on liability and insurance. And so when you have people staying at your property, if you are going through a site like Airbnb or VRBO, they do offer some level of protection. Now, I have had an incident happen where a guest fell asleep in the shower and it later then flooded the bathroom into the first floor. And the amount of damages that I had, I charged the tenant, the renter, but I was unaware that VRBO was going to take a percentage of that fee. And had I known that, I would have charged the renter more so that I could have covered and made myself whole. So I ended up losing money on that opportunity. Now, just because you have insurance or some form of coverage through these sites doesn't mean that you are protected. You probably want to get a hold of your insurance company and let them know that you plan on offering your property as a short term rental. This can help maybe get you an umbrella policy that protects if somebody is hurt on your property. You get sustained property damages and one of the booking sites doesn't cover it entirely. How do you make yourself whole? If you have neighbor complaints, what are you going to do? In a town like mine, we have noise complaints that are often made. The police are getting involved, and that is putting a record now on your property. And so if it continues to happen, it is grounds for you to be terminated out of being able to rent on a short term basis. So you do want to take all of those into account, especially if you are underwriting this and evaluating a property specifically for short term rentals. What happens if your short term rental ability is now taken away? That is a risk that you want to ensure you kind of have planned for. Can you rent this long term and still cover your basis? Now, again, there are insurance gaps, homeowner insurance limitations. You really want to understand what your policy covers and if there is an additional coverage that you can get specifically for short term rentals. There are policies out there that allow you to have that type of policy, but again, the platform protections are not full coverage. You want to make sure you are covering your property and whether that's adding a commercial policy or a hybrid policy, these are where people get lost. This is what happens when people have issues and they didn't plan for the insurance coverage. And I will tell you, assumptions here get expensive fast, and you need to make sure that you think about these sort of things. I've had clients that have wanted a hot tub. Now, if you want a hot tub on your property, that should have another level of insurance because you don't know what's going to happen. People can drown in the hot tub if they're drinking, or, maybe they get burned and their skin becomes affected. It could flood and damage your property. So there's a lot of things to consider when you are opening up your home or your property to other people, especially on a short term basis. Now, if you know me or follow me at all, you know that I love talking about tax and ways to avoid paying taxes based on the proper tax code. So, obviously, legally. But things that you should understand is that if you don't go through a site like Airbnb or VRBO, you will have to consider that you have to pay a sales and occupancy tax. Now, this can get you into trouble if the IRS finds out that you are claiming a short-term rental on your taxes, but you aren't shown as actually paying into that particular tax bucket. So you want to make sure that that's taken care of. Again, if you are on a platform like VRBO or Airbnb, that tax piece is taken care of for you in advance. The way that you treat your income on a short-term rental basis is really going to be dependent on how you plan on structuring your taxes. A lot of people like to have short-term rentals in their portfolio because they can be considered an active real estate investor, which gives you the opportunity to claim yourself as a because you're active, you can then offset some of those expenses and income on some of your ordinary income and expenses. And so this works a lot of times with high income earners. If you have a high income earner and a spouse who maybe isn't working or maybe has some odd jobs, having them be the manager of a short term rental can actually be very advantageous for the tax purposes, where you can offset those expenses and show on paper that you have a loss. And those losses can offset active income from the high income earner, potentially lowering your tax bracket. And so there are some huge beneficial advantages for short term rentals, and you can also depreciate. The new tax code has bonus depreciation and accelerated depreciation, which allows for things like furnishing and other things that you are putting into this property to be completely depreciated in the year in which you took that expense. And so that will help mitigate the tax burden in the early years when you are starting up your short term rental business. Now, again, these are very specific into individual tax policies. This isn't an advice for overall tax planning, but just a overall tax thought process behind why a lot of people decide that short-term rentals are more advantageous, even if they maybe aren't making as much money. They may be saving more on the tax side. So, um, I help homeowners look at short term rentals or look at other rental opportunities and figure out how they can avoid making costly mistakes before moving forward. And ultimately, you want to understand what you're getting into before you end up potentially losing money on a deal. That is probably one of the worst things and the quickest ways that people stop investing in real estate, which is a shame because it is something that can be very advantageous in building long term wealth and in saving taxes. And so, what I offer are services that help you mitigate those risks, understand the risks, and make informed decisions. And this decision might be this is not for you. And that could be a very affordable fee when you think about what you could have gotten into and the money you could have lost. And so, breaking out kind of what I offer here is I offer a readiness call. And so, a readiness call is basically let's look at your property, let's understand what the legalities are. Can you even do a short term rental in your market or in your property? And what does that look like? And then we can go into a feasibility snapshot, really understanding what the fees are in your market and how it can be profitable. And I also help with launch and setup. If you wanted to have me on as an advisor in the event that you have something come up or you want to change your strategy or you want to just look at your overall marketing product, I have that option as well as a monthly fee. And I do offer bundles so that these prices are more manageable if you want to continue moving forward. So, the idea phase, if you are thinking about it but haven't really done any research, this is where that readiness call comes in. This is where we can talk through things to really understand, is this really what you want? Does this make sense for you, for your property? Is it legally, financially, and economically stable for you to move forward with a short term rental? If you have decided that, yes, this is something you want to do, this is where the feasibility snapshot kind of comes into play. And then once you've kind of gone through that feasibility snapshot, you understand pricing, you understand the demand and the seasonality, then you're ready to launch. This is where that ready to launch setup and advisory comes into play, where I walk you through the steps. I get you completely ready. I ensure that it's all set up. You have all the processes in place to help mitigate and lower the amount of time that you may have into the property. Now, you're still going to have to upkeep the property. There's no avoiding that, unfortunately. But there are steps and there are ways that you can really save on time and money by having the right launch strategy. And again, I'm also available as an ongoing advisor to help any active hosts who want to maybe add more to their portfolio or they want to adjust their strategy. They want to look at their profitability margins, whether they've been charging too much, maybe they've been charging too little, and really getting an understanding on an ongoing basis. So, final thoughts. Again, Airbnb short term rentals can be a great strategy. They can make you a lot of money. There have been weekends that I have rented out a property and I've made $10,000. So, totally doable. They can completely really be beneficial to your portfolio. But I will tell you, it can be costly to make a mistake. If you move forward with a short term rental and then they change the zoning, or you move forward and you have a guest that completely trashes your house, which can happen. These are all things that can be very, very costly, especially if you aren't taking the correct plans or the correct actions to prevent them. And so, with my services, I offer you clarity and planning to help avoid and mitigate those mistakes to ensure that this is the right strategy for you, for your property, for what you plan on doing moving forward. So, thank you for listening to this webinar. I will be emailing out a complete video of this following the conclusion. And if you are interested in booking a call with me, I will include all of that information as well in the email.